What is up, guys? Welcome back to my channel, and on today's video, as I promised on the last one, we're going to be going through the strategy that I had the whole aha moment. It was weird. I figured it out, and it's always on a Thursday when I figure this out, and it makes no sense because I'll show you through my journal my most successful day is a Thursday. Every other day is a losing day. I don't know why, but every time I get to a Thursday I figure out something new, and then I have to wait like 2-3 days to implement that new thing, and then on a Monday it does really good, but then something, or Tuesday, Wednesday, it all goes wrong. But last night I figured out why it all went wrong. On to yesterday's video, I told you, or the video before, whenever this goes up, that I told you to concentrate on the majors, don't trade too much, and be really fussy. So when you have those three beforehand, plus what I'm about to teach you now, it should be quite golden. It should be good, it should work. But, as I said, there's only one way to find out. I'll take you through my aha moment, through my journal of the trades I won and executed, and what I need to do more often to be more successful. And I've proved it. I've proved it because I predicted the future, technically, which is what you do in trading. But how do I be more efficient at that? I'll show you now. So let's go on my computer and let's do this thing. What is up, guys? Right, let me close this blind because you can't see shit. Does that help? It kind of does, doesn't it? Right, I'm only a small man. I'm a very small man in the corner of the screen. So, what have I learned? You can see my screen. I've watched, if you watch the Greg Secker videos, right, where he trades live and he goes through everything with you, I watched those 2 videos probably about 20 times. And what I figured out was, one, his screen layout and what he trades. So on the previous video, that's where I was showing you only concentrate on the majors, because when I was going through Greg's videos, when he does all these trading series, when he goes for his students, they only go through the majors. And I was like, why am I going through pound CAD, pound AUD? Like, you just don't focus on those currencies, only focus on the majors. So if you haven't seen yesterday's video where I go through it all, it will be somewhere, just find it, because it's very valuable. Right, I'll put a thumbnail on the screen of what it looks like, because I don't even know yet, I haven't started editing it. This is, we're going to smash this Sunday, so Monday come through, we can dominate. Okay, so what my big aha moment was 1, only trade the majors. 2, lay my screens out with basically 0 indicators, but I have some. But they're not like stochastics, MACDs, whatever, okay? They're just moving averages, and the only real indicator I've got on here is an RSI and an alligator indicator. Other than that, it's purely just price and moving averages. That's all I'm focusing on. And because I'm focusing on the majors, they mean so much more. Because they're more traded, they're traded more, which means they're more liquid, which means they have less spread for you to break even, and it's just not making life harder for yourself, which is the main thing. Okay? Want an easy life, that's why we want to trade. It's not easy, but you know what I mean. Okay? You know what I mean. So let me just walk you through my screen layout, what I'm going to do, and how I'm going to look at things, and then go back through my journal, and I'll tell you why I had these aha moments, and when I implemented it, it really worked, but it needs tweaking, which is what I'm going to show you out right now. That was a lot of words. Okay, so top left, we have the daily. The only indicators we have are the 200 EMA in green and the 50 EMA in red. On the 4 hour, same again. 200 EMA in green, 50 EMA in red, with the RSI at the bottom. The reason for that, I want to know if it's getting stronger or weaker on a higher time frame. Okay? Because it means more on a higher time frame. The higher time frames control those lower time frames. Then I have the 1 hour with the alligator indicator. I want to know at that particular time if the trend is going down. Remember, I'm still not entering on the 1 hour. I'm going to enter on the 5 minutes. Now, you know I like fibs, and I do like the smart chart strategies, but it's weird how I go through this, because instead of going to the strategies first, I go to the strategies last. I know, right? It's a bit weird, but let me explain. So let's just go through. Oh my god, damn magic mouse. So let me just go through what I would do at 6 in the morning, right? I'm looking at the daily, okay? I'm looking at the daily. I can see the 50 being pulled through the 200. Massive bullish signal. It is on a major as well, so it means more. So this means I'm basically looking to buy for this trade. But when I look at the 4 hour, the price is below the 50. So which means this is short, really. And then when I look at the 1 hour, the trend is actually going down. And then when I look at the 5 minute chart on the Fibonacci pivot charts, the price is below the daily pivot. So even though the daily is saying we should actually be buying, the market is actually going down, and we can see this. So if you want to be doing those crafty trades where you know price is probably going to retrace to the 50 on the daily, or it's going to retrace to the 200 on the 4 hour, you know you've got a couple pips to play with. So you're thinking, okay, it is an upwards trend, but it's going to retrace to the 50 on the daily, or it's going to retrace to the 200 on the 4 hour. Because if you go through history, oh shit, wrong one. If you go through the history of the 4 hour chart with the 200, you can see that the 200 EMA is very well respected, and price always goes back to it on 200. So look, 4 hour chart, 200 in green, price hits it, bounces off, hits it, bounces off, hits it, bounces off, comes back to it, hits it again, bounces off, comes back to it again, hits it, bounces off. Then it's going off the 50 in this strongest trend. So the likelihood of the price going back to the 200 is very high. And it's even higher when we can see that the 1 hour trend is going down and it's below the pivot line. So if you want to be a bit cheeky, you can be like, oh, okay, so I know the price is going to go down. So what you can do is what I've been doing is, I go, instead of going to the smart chart strategy first, now you go to them, because you've already got the picture in your head. So you have, ooh, I keep zooming out. So you have got the knowledge saying, okay, yes, it is an upwards trend, but everything else is saying it's going to retrace to that 200 pivot mark. So what I want to do is I want to now look at a pip runner strategy for the AUD USD, shorting it. Okay, so I'm going to go on the pip runners and AUD USD. Let's see if it's going to do a short. Here you go. It's showing you should go short. So what you could do is enter this trade and ride it to that 200 exponential moving average in green on the 4 hour chart. So what I do like to do as well is I like to understand the numbers of where it's actually going, because then you can make adjustments, because sometimes it doesn't work. You can't just enter where Smartcharts says. You really have to look closely at where you're actually entering and taking profit. So really we want to take profit here on a 4 hour chart. So that's 0.6787, so 67876. So we need to look down here on our entry chart. On the 15-minute pip runner, is this 67876? Because that's where we want to take profit. So let's have a look here. Ooh, we're going to say there. So let me just draw that on the chart so you guys can see. Trend lines. Oh, not the horizontal ray. Trend lines. Horizontal line. So 67876. I think that's what it was. Let me go double check. So 67876. 67. Oh, that's close enough. Right, so where this red line is, where I've drawn it on the 4 hour, that is where the 200 is on the 4-hour chart. That's where we'd likely want to be. So we could easily take this trade because it fits our rules. Yes, it's saying that is an upwards trend, but every other one is saying it's probably going to retrace. Look, price is below the 50 as well. If price was above the 50, we wouldn't have done this trade, because if it's above the 50, that is a strong bullish signal. Okay, so if it's above the 50 on a 4-hour, or if it's above the 50 on the daily, that's a strong bullish signal. As we see here, it's above the 50 and a 200 on the daily, but when you look at the 4-hour, it's actually closing below the 50. So, and the 1-hour is saying it's a downwards trend and it's broken that daily pivot point. So we could clearly say, yes, it's an upwards trend, but at the moment it's retracing back to that 200, and we could take our little sneaky pips. So if we were to enter this trade, which would be perfectly safe, you know, you could do a 1-to-1, 15 pip, nice little move there, and you could be quite safe with that. I mean, you'd have an expiry date of 4 hours on this trade, but as you can see, instead of, let me just go back to a normal chart, so I can give you another example, AUD/USD. So instead of going to the strategies first, you stick to the majors and you see from the price action what it's going to do. So as I'm going to go through this again so you guys can take notes or screenshot it or whatever you need to do, but you can see, yes, we are on a strong upwards trend, but on the 4-hour it's broken below the 50, on the 1-hour it's showing us a downwards trend, and on the 5-minute chart it's broken and rejected with a high test here on the Fibonacci daily pivot line. Then we look for a smart chart signal to retrace back to that 200 mark. As you see, we've got loads of room to play with before we get to our major price point here, which is where the 200 is. So as you can see, instead of going to the smart chart strategy first, you go to it last. After you already know what you're looking for. You do your tests, you go through, you look for your rules, you say, okay, it's going to do this. Is Smart Charts giving me a signal? So instead of getting confused by all the signals Smart Charts gets, and you're going, well, Smart Chart says up first, but then everything else doesn't really make sense to why it's saying that, you're skipping out all that rubbish and you're going for, right, I'm looking for shorts because it makes the most sense. So if it gives you a short signal, go for it. But if it doesn't, ignore it and enter this way. So let me see if I can find another example. So we're looking for a buy. Price is above the 50, we're looking for a buy. The 1-hour is saying we should look for a buy. Great. So I wouldn't obviously enter this trade here. What I would do is what I've already have done, as you see by these flags, is go, right, when it breaks a daily pivot, I'm going to go to the R1, which I did that. That was a £78 win, 20 pips. Okay? And what strategy was this doing? This is called the George pivot. Yeah. That's going to go down in history. The George pivot. Hey? You're about to learn the George pivot. This is some good stuff, man. This is next level stuff. You know? This is going to make you rich. I'm joking. It's not. It's going to give you a good eye-opener of how to trade the market. So even though Smart Charts gives you some good stuff, don't rely on it. Don't take that as gospel. If Smart Charts is saying you should buy, really do your research, because you do get a lot of false signals. Remember, the signals are on moving averages and bar positions. Then it gives you signals. So let's say the 8 is above the 20 and you got 2 ring high bars. It's saying that you should short it for a 180 phase changer, okay, or something. If you know what I mean, one of those. That's only taken in 2 reasons why it's giving you a signal. You need to look at multiple reasons to enter a trade. You see what I mean? So remember, you look at the Smart Chart strategy last. This is what I figured out. This is what I'm going to do. So as I was going through this trade, it's a major currency pair, the euro pound. So we're looking at it. It's going, the 50 is above the 200. It's clearly in the bullish trend. On the 4-hour chart, the 50 is above the 200. The price is above the 50. As you see, look, it's bouncing off. It's above the 50. You look at the 1 hour on the bottom left, we have a strong upwards trend confirmed by the alligator indicator opening up its mouth, and it's broken, it's breaking above that daily pivot. And I got in there nice and early, nice and cheeky, and took myself a £78 win with 20 pips, and it went for 1 hour and 30 and 53 seconds. So in 1 hour, I've made more than what I'd make in 9 hours on my job. That's the power of trading, and that's why I want to master it, and that's why we need to work together to figure this out, which is nuts. Remember, in one trade, I've made £78. In 9 hours of my job, I would only make £72 after tax. Remember, this is tax-free. Maybe, I don't know. Disclaimer, fuck. But in reality, I had all these check marks. I was playing it really safe. I could have gone a lot higher. But again, we don't know it's going to go that high, so I'd only go to the next resistance line. But let's just, for shits and gigs, have a look at what it could have been. So I entered here. I could have my take profit there. So that could have been a £200 day, and I would have easily made it. £200 day. Remember, guys, this graph here, from the start of this blue line to the end of the blue line, is 1 day. So in 1 day, I could have made 200 quid, 58 pips, which is nuts. Because it's on a major, it moves so much more, and I'm paying so little spread. Remember, I'm only paying 2.2 pips spread. So I'm making more profit, and my stop loss is safer as well. It just makes more sense, and that's where I got that aha moment, and it works. And let me go through my failed attempts, and I'll tell you why they have failed. So if you understand that strategy, let me know in the comment box below, or if you want me to go more in depth on how I do it, how I execute it more, then let me know. And then when the group launches, remember the group is in the link below, so you queue that. The group is still closed because I'm making something super awesome for you guys, just so we can all learn straight away. So let me go on my trades, and let me go on my closed ones, and this is the way I get it all down and dirty. So let's look at the George pivot. Gold, okay? I traded gold. Now, what I shouldn't have done was look at my phone when I was on the toilet at work, but hopefully no one from work was listening to this. Anyway, moving on. So what I noticed is this is annoying, so let me just go gold on the charts, because it's just easier, isn't it? Which is right with Smartcharts, because you can see everything, but I like to see it as a chart form so I can bring it out for you. So let's go on gold. You should see a big red flag somewhere. Here we go. Right. Here we go. So I lost £17. I was selling it. I predicted where it was going to go, but my stop loss was in the wrong place. So I could see that it was a strong bullish trend. A strong bullish trend, right? And the price was above the 50. Okay? No, it wasn't at the time. I don't know. I can't remember. Price was above the 50, right? But it was showing resistance. And I think at the time, the alligator indicator was facing down. As you see here, it was doing this movement. So ignore where it's opened here properly. It was going down like this. So I could say, okay, so price is going up on a daily. I could see it retracing back to that 50, because remember, it will do. It's strong, gonna pull back to that 50. The alligator indicator on the hour was facing down at that time. So I was like, oh, okay, I'll be a bit cheeky here. I can see the price is gonna retrace back to that 50. I'm gonna put in a short. And I was right, because the price has broken that daily pivot. So that was another indication for entering this trade, right? But because I was stupid, I moved my stop loss. I shouldn't have done that, okay? So my stop loss, let me just go through it again. My sell entry was here, my take profit was there, and my stop loss was here, okay? So I moved my stop loss after it got below this pivot. I thought, oh, I don't really want to lose this. Letting fear, my emotions take over. We don't want to have that. It's bad for trading. I moved it down here, so I was like, oh, okay, I don't want to lose that much. And then the market breathes, as it does. It came up, hit the stop loss, took me out, and then went back down with style, right, to hit my take profit if I was still in. So if you have a look at the 4 hour, look what it did. It went back, hit the 50, and then came back up, which we can see here in this 5-minute chart and a Fibonacci pivot. So I predicted it correctly, but my fear and my emotions made me move my stop loss, which took me out of the trade. Okay? I've done this multiple times, and I've been really annoyed at myself. So that would have been another £70 win. Okay? Just on 2 trades. So euro, pound, and gold. They're not correlated. That was the word I'm looking for. Correlation. They're not correlated. So it's safer for my capital because I'm not buying the pound on one currency and I'm selling the pound on another. It just doesn't make any sense, right? So let me do one more example of where I've messed up with my stop loss, because you're gonna laugh. And it's always the same. You move your stop loss, or you have your stop loss too close, and you screw yourself. So what we're looking at, pound Swiss, no, that's not me. Won that one, gold. UK 100, should we do that? Or, yeah, UK 100, let's just do that one. So UK 100, let's have a look at what I was doing. Here we go. So the UK 100, on the daily, massively downwards trending. So what I was actually doing here, I'm going to walk you through this. This is some serious stuff, okay? So I can see it was in a downwards trend, and obviously this was a massive retracement. So if we get our sexy Fibonacci retracement tool out, what can we see? We got a retracement tool out, it's in the gold, it retraced, it rejected off the 618, it's broken the 50, you know? We could see that. It's hit the 50 on a daily, but it's below the 50 on the 4 hour. So I'm thinking, oh my God, this is a short opportunity right here. The price on the hour and the alligator indicator opens up its mouth to go down, showing it is a downward trend, okay? So let me go again. Daily price is below the 200 EMA, and it's retraced to the 618, and it's rejected and bounced off. You go to the 4 hour, price is below the 50 and the 200, okay? You go to the 1 hour, alligator indicator opening up to say it is a strong downwards trend at the moment. And then I looked at my Fibonacci pivot points. Obviously I'm not going to use the Smartchart strategy because I don't have the subscription account where you do stock indices, so I'm doing it my own way. So I entered my short trade here and just view trade, sell trade, right? So I've predicted the future correctly, but this is where I went wrong. So I was selling it, right? In 4 hours, I messed up. I was selling it. Let me just bring it up so you guys can see. So my sell entry was here. My take profit was there. And my stop loss was here. So I would have made decent coin on this. I would have made £105 on this. So you can see when you do the Fibonacci strategy, you make way more reward to risk than you would do with the stock, with the Smartchart strategies built in, which is a 1-to-1, okay? But my stop loss was way too close to my sell entry, because you gotta let the market to breathe, right? So it broke down through here, came up, and then did what I wanted to do eventually, but my stop loss was too close. If my stop loss was behind this resistance zone, yes, I would have made less money, but I would have made the trade. It's just a safer option. Like, there's a major price point here where I should have had my stop loss above. Like, I didn't have to go that high, but look at this major price here. I could have just had it here, just below. I would have made £70 on that trade. It would have had to fight going back through this R1 line, and then fight having to break this major price here, 6257.8. You know, I didn't have to have it so close. My emotions and my greed took over on this trade. I should have just said, look, put the stop loss higher, Smartcharts does the calculations for you, and I would have made decent money on this trade. Again, my strategy works for predicting the market direction. Obviously not 100% of the time, because no one does that. But I failed because my stop loss was too close. So again, guys, I hope this makes sense. I hope you realise that 1, only trade the majors. 2, be really fussy of what you're trading. And 3, don't trade too much. Only trade maybe 2 currencies, maybe gold, or maybe 1 stock indice, because that way you're only risking a small percentage of your account. Not doing what I used to do, trade like 8 to 10 trades. I'm risking like 20% of your account at any one time, which is a bit scary. So from 6 in the morning, this is what I'm going to do with the majors, and I'm looking forward to showing you those results, guys. Again, I don't really use loads of indicators anymore. I'm just going off purely price action and the moving averages. And when you understand how powerful those moving averages are on those time frames, especially with the majors, things get really sexy. And as you can see on one of my trades, I think I made £95 if you look through that list. You can scroll back through the video and you would have seen it on there. £95 on one trade. It was nuts, okay? I know this is a demo account, but you can see the potential. And the only reason why I failed on this strategy was because my stop losses were too close. I let my fear and greed affect where I put my stop loss, which you shouldn't do. So hopefully you learn from my mistakes, guys, and you make massive profits, and we could all grow together. Again, if you want to join the group, it is closed, but first come, first serve. And I can't believe that what I'm going to do in the future is going to be amazing, because obviously we can learn and grow together. Going through the Smartcharts journey, because there's a lot of unanswered questions with Smartcharts. It's great, but they don't tell you everything. And I've learned that, because I spent $5.5 grand with them. And I've learned all this stuff outside of Smartcharts, but implementing it in it and figuring it out, studying it, and doing everything so you guys can learn with me at the same time. So guys, if you like this video, please give it a like, give it a subscribe, and join the group so we can all learn together. I'll see you in the next one. Love you all.